Hello students, in today's session let us learn about the basic scheme of GST. This is the second module of our course GST. In today's session we will look into the scheme of goods and services tax or GST in India. I hope you agree with me in saying that all of us are enjoying the benefits of introducing GST in our country 9 years ago. It has transformed the indirect tax system in our country in terms of how businesses operate, filing returns online, collecting refund, following the timelines fixed by the government, etc. GST is one of the most significant tax reforms in the country, contributing to a more unified and transparent taxation system. Now, let me tell you the topics I will cover in this video. 4 topics, namely basic scheme of GST, overview of its structure, key components and implementation framework of GST are covered in this module. Now, let us look at each of these topics in detail. India is following the concurrent or dual GST system. Now, the question is, what is concurrent or dual GST system? It is the method by which both the centre, states and union territories levy and collect indirect tax for the supply of goods and services. This system was primarily adopted by countries like France and Canada. When India introduced GST, this model is followed as we have the system of central state revenue sharing. Moreover, this will avoid cascading effect of taxation, the concept which we have learned in the previous module. In simple terms, it is nothing but adding taxes at each stage and charging the GST from the ultimate consumer. We have CGST and SGST where the central government will collect GST for interstate supply of goods and services. Similarly, we have UTGST or Union Territory Goods and Services Tax where the supply and sale of goods and services happen within a union territory. This system will help in maintaining the fiscal balance and revenue sharing between the central government and state governments. Now, let us discuss the nature of GST in India. GST is a multi-staged and destination based indirect tax charged on the supply of goods and services. It is important to know the meaning of these two terms connected with GST. That is, GST is a multi-staged and destination based tax. First, let us look at the meaning of multi-stage tax. While discussing about GST as a multi-stage tax, it refers to the fact that GST is applied at multiple stages of the supply chain, right from production to the final sale to consumers. This type of levy is in place because GST is a value added tax and tax is levied at each stage of production and distribution. This ensures tax is collected at every stage and thus eliminating double taxation. Moreover, GST is designed in such a way that it is paid ultimately by the end consumer. Moreover, businesses at each stage can claim input tax credit or ITC to avoid cascading effect of taxation. Now, let us look at the GST taxation process. It starts with the manufacturer and ends with the consumer. The process starts with the manufacturer buying goods and other inputs and GST is levied at that stage to the manufacturer. The manufacturer pays GST on the sale of finished goods to the wholesaler, but he or she can claim the input tax credit or ITC for the GST paid on inputs. Then the wholesaler buys goods from the manufacturer paying GST on the purchase. When the wholesaler sells to a retailer, GST is again levied, but the wholesaler claims ITC for the GST already paid to the manufacturer. Then from the wholesaler, retailer buys the goods paying GST for the purchase. When the retailer sells the item to the final consumer, where GST is charged again, but the retailer claims ITC on the tax paid to the wholesaler. Now, the final consumption stage comes where a retailer sells the item to the consumer. This is GST added to the bill with the sales, and the consumer cannot claim ITC, that is input tax credit, because they are the ultimate taxpayers in the process. Before introducing GST, all taxes were collected at the point of production. This had lot of disadvantages, and GST is charged at the point of consumption. Thus, from origin based tax to destination based tax concept is made possible through GST. For example, if a manufacturer in Karnataka sells goods to a dealer in Chennai, the tax is collected by Chennai where goods are consumed. Now, let us discuss the components of GST. Components of GST can be classified into 4, that are Central Goods and Services Tax or CGST, State Goods and Services Tax or SGST, Union Territory Goods and Services Tax or UTGST, and Integrated Goods and Services Tax or IGST. First, let us start with CGST. It is levied by the central government for transactions between two different states or union territories. The 50% revenue collection goes to the central government and the remaining 50% to the respective state. For example, if a trader from Kerala sells goods to a customer in Kerala for rupees 10,000 at 5% GST, rupees 500 is charged from the customer as GST. Out of rupees 500, rupees 250 will go to the central government and rupees 250 will go to the Kerala government. Now, let us discuss about SGST and UTGST. SGST is levied by the state governments and UTGST is levied by the union territory. SGST or UTGST applies to intra-state supply within the states or union territories. Intra-state supply refers to supply of goods and services where both the supplier and the recipient are located in the same state or union territory. Now, we have to discuss about IGST. This is levied by the central government. This GST is levied on interstate supplies between different states or between a state and a union territory, and also for imports. The revenue is collected by the central government and later transferred to the consuming state. Example, if a trader in Maharashtra sells goods worth rupees 10,000 to a customer in Tamil Nadu at an 18% GST rate, IGST will be 18%, that is rupees 1,800, which is collected by the central government and later transferred to Tamil Nadu based on the sender state revenue sharing. Now, let us look at the tax rates for GST. The tax rates are 0%, 5%, 12%, 18% and 28%. 0% is applicable to essential goods like fresh fruits, vegetables and educational services. 5% GST rate is applicable to essential services and mass consumption items like rail tickets and economy class air travel. 12% GST rate is applicable to standard goods like mobile phones, processed food and business class air travel. But 18% GST tax rate is applicable to most services and consumer goods like restaurants, insurance and telecommute services. The higher rate of 28% is applicable to luxury goods like cars, tobacco, aerated drinks and gambling. Now, let us look at the diagrammatic representation of GST tax structure. 7% items come under 0% tax rate, 14% items come under 5% and 17% items come under 12%. 43% items come under 18% and 19% items come under 28% GST tax rates respectively. 0% GST items are agriculture and food products, educational books and newspapers, essential daily use items, metro and train travel, life insurance under government schemes, fresh fruits and vegetables and unbranded food grains. 5% GST items are applicable for apparel below rupees 1000, footwear below rupees 500, economy class air tickets, packaged food items, branded paneer, household necessities and public transport services. 12% GST items are for apparels above rupees 1000, frozen meat products, Ayurvedic medicines, spectacles, umbrella, processed food items, certain medicines and hotel accommodations worth rupees 1000 to rupees 7500 per night. 18% GST rate items are mineral water, footwear costing more than rupees 500, cameras, monitors, printers, steel products, bamboo furniture. 28% GST rate items are for pan masala, deodorant, shaving cream, hair shampoo, water heater, weighing machine, vacuum cleaner, automobiles, 5-star hotel stays, luxury items like cars, tobacco, aerated drinks and 5-star hotel stays. Exempted items under GST are alcohol for human consumption, petrol and electricity. The GST rates for services are restaurants 5% or 18% based on conditions. Banking and financial services at 18%, transportation 0% for railways and 5% for economy air travel. Hotels and lodging 12% to 28% based on room tariff. I hope you got a good insight on the topic basic scheme of GST. Thank you for your patient listening. Happy learning. Until we meet with the next module, bye from me. Thank you. It is levied by the central government for transactions between two different states or union territories. The 50% revenue collection goes to the central government and the remaining 50% to the respective state. For example, if a trader from Kerala sells goods to a customer in Kerala for rupees 10,000 at 5% GST from the and rupees 500 is charged from the customer as GST. Out of rupees 500, rupees 250 will go to the central government and rupees 250 will go to the Kerala government.